What is up, team? So in today's video, I want to talk about, I'm going to be obviously be talking about the crypto market and the little bounce that we had yesterday after the Federal Reserve announced a 0.75 basis point hike in interest rate. Okay, so we're going to be having a look at that. We're going to be talking about the interest rate, inflation, unemployment, and GDP, and how can Bitcoin essentially survive this bear market, crypto winter recession. This is my watch list. For those of you guys who don't know, I'm going to be looking at, obviously not all these coins, but Kadena, how will it react? I mean, Kadena is one of my big bags. Of course, you got Polkadot, Bitcoin, Chainlink, Crypto.com as well, and so on. But right here, we got Bitcoin sitting. Before I get into that, we got Bitcoin sitting at 21,477. We got up 6% in the past 24 hours. We had a nice little bump. Of course, dead cat bounce in my opinion. The news yesterday were pretty negative in my opinion. They were not positive news. That means less people are going to be investing. I think it was just a pump and dump. I think this is going to come back down. If we have a look at the Bitcoin charts real quick, in the past day, we had this nice little pump. The Federal Reserve announced it, I believe, right here. We had the dump, and then we had a nice little pump. And I believe this was just a retest, a bounce. The market was oversold, and now we're essentially dumping back down. Same thing with Kadena. Kadena had a nice little bump yesterday right here. We came all the way from 1.53 all the way to almost $2. It was 1.87. That was like a 45 cent move, and then boom, back down. Up 8% in the past 24 hours. Market cap 300 million, very cheap. How will these tokens, Bitcoin, Kadena, Crypto.com, and so on react in this market? First of all, let's have a look at the interest rate. Okay, the interest rate are up 1.75%. That's like one of the highest price hike in 25 years, guys. That is crazy. And the reason why I say this is because look at this. Look how high and steep. We're just going up in a straight line. Right here, we saw, in 2016, we saw the first hike. We were slowly going up. And then after that, we came back down. Of course, during the COVID, the pandemic, we came back down pretty aggressively. But now we went from 0.5 to essentially 1.75 in a matter of a snap. So that's pretty crazy. That's bad news, and maybe more rates and hike is going to come in the near future, but we're going to have to see. Another thing is unemployment, guys. Unemployment is sitting at 3.6%, and it's sitting pretty steady. But right now, a lot of high-tech companies are laying off employees, which is pretty bad. So nothing too crazy. I mean, it's pretty crazy because we're gonna see the effect coming in the future. But we know that when there's unemployment going up, inflation high, that's how a recession happens. People don't have money to spend, and so on. We're going to talk about how that could affect the crypto market as well in just a second. But we got right here, the inflation rate is sitting almost at 8%. It is at 8%. It's at 8.6%, I believe. Let's have a look. Yeah, it's sitting at 8.6%. So we topped up last month. We were sitting at 8.3. The month before that, 8.5. And this thing just keeps going up. And the reason the feds are, essentially raising the interest rate is to combat this inflation problem that we're currently having in America. So as you guys can see right here, if I put in the past 25 years, we're actually exceeding what we did in 2008. So in 2008, we did have a nice little bump to approximately 6%. Came back down, interested went up, came back down, and then we were consolidating a little bit, going sideways. We were holding between 2% yearly, I would say, on an average until the COVID-19 pandemic happened. But something that I really want to talk about is essentially a recession. For those of you guys who don't know what a recession is when the GDP is essentially negative for 2 consecutive quarters. So we got Q1 in 2022 being negative, right? And now we're waiting until Q2, right? So Q2 is ending in essentially 14 days from now, and a lot of people are hoping for it to be negative. Now, how will it affect the crypto market? That can be very bad because Bitcoin has never essentially been in a crypto recession before, or in a part of a recession before. So it's going to be very interesting to see how this happens. Right here, we got Q3 was pretty bad, but it was positive. Q3 of 2021, Q1, Q2 were good. Q4 were fantastic. Boom, Q1 negative. We just got crushed in 2022. Nothing to see. That was pretty bad. And then we're waiting for Q2. So if Q2 does become negative, we're officially going to become in a recession. and we could essentially have, massive panic throughout not only crypto market but financial market as well. So it's going to be very interesting to see how the crypto market reacts. But if we have a look right here at we could have a look at the all-time views real quick on the crypto market, or on essentially Kadena. How will Kadena react? How can we go? I mean, Kadena can really come back and retest this area right here below, which is 1.38. Again, I saw we retested that area a few times on TradingView, so that's that. We peaked a few times on 1.38, but if we do enter a recession, we could definitely come back below this level right here, below 1.38. I know 1.38 is holding pretty strong. We got one peak, two peak, three peak, or three bottoms right here. 1.38 could definitely be in the books, guys. It's definitely not something that I'm putting out of the books. Bitcoin sitting at 21,466. Who would have thought? We are below the 200 moving average, something that I do want to mention. But if we actually look at Bitcoin right here, we could pretty much come back down to these levels right here. I mean, 13,000, 10,000. We do have a gap, CME gap at $9,000. So Bitcoin coming below $20,000 is very possible, especially if we start this recession starting in July 1st, July 2nd, whenever the numbers comes out. It's going to be very interesting to see. Social sentiments are bearish, and the reason why a recession could affect Bitcoin is because, like I said a few minutes ago, unemployment goes up, right? And when unemployment goes up, people don't have money to spend. When people don't have money to spend, they want to be saving their money and buying food, things that they essentially need, gas for their car. They're not going to be looking life-saving stuff, right? So they're not going to be really looking at the dollar saving up or buying crypto or stocks. They're going to be looking to essentially withdraw their crypto money to essentially scrap for food. But as of right now, unemployment is still sitting at 3.6%. So we didn't hit the fan yet. Let's just say it like that. But it's going to be very interesting to see how this plays out in the next few months. I think there's a lot to see, and a lot will be coming in the next couple of months, in my opinion. But of course, I am not a financial advisor, guys. I am just some guy on YouTube. Always do your own research and due diligence. And if you guys like this video, of course, don't forget to leave a like, comment, subscribe, and I will see you guys in my next video.